We're seeing panic selling all round and South Africa not being exempt to the negative sentiment. We'll be now crossing to Yolanda Le Roux at Nedbank Capital to be giving us, she'll be giving us some insights into what's been happening on the local front. Yolanda, markets are down to the tune of around 3%. In yesterday's session, we gained 2%. We're seeing broad losses coming through. What do you make of the second round or the third round of negative sentiment that we've been seeing on the global economy?
Hi, Eleni. I think it's further evidence that that there isn't, that the liquidity that has been pumped into the market doesn't justify the expensive asset prices, and we're seeing that the fears resurfacing from Europe out of the debt with Spain, the smaller banks that are going to have to merge, the Bank of Spain rescuing one of its smaller banks. So really, Eleni, fears just resurfacing about debt management globally, and how it's going to impact on China, being, with Europe being one of its biggest trading partners. And then obviously we saw the possible war rumor out of North Korea, which is just a little bit more instability, out in Asia with all the Thailand violence that's happened recently. So all around instability in the global economy that's causing investors to move out of equities and into currencies, and especially the dollar, Eleni.
Exactly. We're seeing quite a lot of gains coming through for the dollar. The rand obviously bearing the brunt of the gains that we've been seeing in the greenback. Where do you see the rand going from these levels? Because we're very close to that 8 rand mark, and we saw it hit above 8 rand late last week. We know it is all about the confidence crisis that we've been seeing in Europe, and you alluded to all the issues that have also been filtering through from Asia.
Eleni, we could see possible rand weakness if we do continue to see the investors moving into the dollar, probably a 20. But obviously, we have been hard hit. I think what's important is if you look at the equity markets, we could see us coming down another 400 to 500 points if we don't really get some positive news or some kind of news that we are seeing some stability and there is some resolution to the debt crisis.
Well, speaking of positive news, we did have positive economic data out of the US yesterday. New home sales increased quite significantly, but we also know that the US is set to release more numbers today, and we are hoping that is going to stem the tide somewhat. Do you think that this could create some more positive momentum? Because up till now, we've seen investors largely ignore the economic data that we've been seeing, whether it be good or bad.
I think, Eleni, it could possibly stem us from further moving lower, and probably just cushion us a little bit this afternoon if we do get some confidence numbers coming out of the States. Positively, we're going to see the ABC numbers coming out. We're going to have the Case-Shiller numbers. So hopefully those numbers will perhaps stem the tide until we get further news from Europe in terms of stabilizing the region, and that really will help us, unless of course we get more negative news, and therefore it will just overshadow any positive news that we get out.
Yolanda, also looking at the GDP number that was out in South Africa, markets not responding to this news whatsoever, even though it came in better than expected. 4.6% growth is what we saw for the first quarter of this year, 3.2% in the last quarter of last year, and markets were largely expecting 4.3% growth. So it did come in better than expected, but no real responses to the better than expected news.
Eleni, I think it's possibly twofold. It is a good number considering how far off a low base we've come off. Year on year from previous year, we're up 1%. And I also think that the Transnet strike, however, is going to put a damper on GDP numbers for the second quarter. So as much as we've seen good numbers for the first quarter, I think the second quarter is a little bit more uncertain. And when you look at the first quarter numbers, we look at the manufacturing number that's come off, so that little bit negative. It means that manufacturers are possibly not seeing consumers coming to the fore. We see retail numbers still low. The mining numbers, however, were nice. They came up at 15.4 off higher high commodity prices. We saw finance moving higher, which is really positive. We're obviously seeing a lot of the insurance market possibly doing better, and the real estate market, that seems to be coming to the fore. So all around, I think a mixed bag of numbers, but like I said, Q2 is going to be a concern, so therefore investors and consumers remaining cautious.
We saw some numbers out of Adcock Ingram today, really proving that this is a defensive stock. Interim headline earnings per share increased by 11%. We know that they have been on the acquisition front as well and growing their books. Your view on the likes of Adcock Ingram, a company that has got quite a lot of cash at this point?
Yes, Eleni, fair results. We see an increase in dividend. They did well for their H1 HEPS, and it is a good defensive play. We see them run very hard. They've broken the long-term upward trend line from March 2009. I think it's fairly priced. We're possibly seeing investors who bought stock at 48 Rand 6 months ago possibly taking a bit of profit. We see it moving into a sideways pattern. But I think fair stock, I think it's going to be good. It's a nice dividend play. It's going to provide returns for its investors in the long term, Eleni.